Hello everyone, this is Son of Abba here, and I'm going to discuss investor psychology today, especially in the silver market. Um, so, here we are. As you can see, this is a theory I've developed over the last few days, and each node on this chart, the line graph, represents a new level of awareness in the price of silver. So, this is the first level here. This is actually level 0. It's pre-build-up, sort of like a pre-initiation stage. And this is where I think we currently are right now. We're currently at a level 0. Investors are neither overexcited or bearish on silver in gold's price, in my opinion. Many are awaiting the eventual quantitative easing by Ben Bernanke in the US Fed and the eventual bailouts in Europe, followed by stimulative ECB easing. In my opinion, it will be the euro that gets the first cash injection, followed by the dollar. And as you can see, level 0 right here is the bottom left. And as you progress up, you transition into level 1, level 2 awareness, level 3, level 4, and then level 5. And now I'm going to go on to a classic example in history, which was in 2011 from January to April, which to me represented a level 0 through level 3 awareness. And next slide. So here the price is courtesy of Kitco, and as you can see, this to me represented level 0 awareness. Silver had declined from 31 an ounce all the way down to 27.90 by month end. And to me, sentiment was neither bearish nor bullish in investment circles. Of course, the mainstream media is trying with great effort to instill that silver is always a bad investment, always ready to fall, even as it rose to historic nominal highs at breakneck pace. But the truth of the matter is that no matter at what price, volume on physical markets like eBay was astonishing. It represented a tropical storm sitting in the Gulf of Mexico, picking up moisture as it builds for a direct hit on coastal land. Also, my anecdotal evidence of watching countless items on eBay proved that 99% of silver sold was in bar coin, ingot, and pellet form. And level 3 awareness represents the first stages of contained mania, in my opinion, which you'll see later on. Alright, so now on to February 2011, which represents level 1 awareness. Alright, so here we are in February 2011, and this represents level 1. Silver has reversed its downward trend from level 0. Despite the mainstream media attempts to discredit it, it moved from $28 an ounce price to $33.90 by month end. In a steady, solid, almost linear pattern. This marked the beginning of a budding interest not only among long-time silver bulls, but for the first time in 32 years, silver was rising towards its nominal highs, breaking personal PRs every day. It had been 32 years since the Hunt brothers were able to help push silver to $50 an ounce in January of 1980, 9 years after Nixon took us off the gold standard in 1971. The wider public and those that have silverware in their physical position are actually starting to make up a larger percentage of the silver exchange on inter-entity physical markets such as eBay. And to me, around 5% of the total investor market is now in the form of silverware in this month, from what I saw on eBay. So now we'll move on to level 2 awareness, and that was represented by March 2011. So here we are in March, and this is the beginning of level 2 here, and this also means higher volatility, which is expected, as with a hurricane that has just breached the critical category 2 level, sometimes dropping for brief periods of time back to category 1, but for the most part increasing at a much slower rate than level 1 awareness. The price of silver had moved in various stages throughout this month, as you can see. Varying levels of technicals and hedge funds have bought and sold to each other, as this level sparks another form of psychological brewing, as again a hurricane will at times be held in one area by a high pressure system for longer than normal, building strength and of course broader appeal as more people take notice, even at the subconscious level. And to reiterate my theory, as the silver price progresses from each stage, there's a higher percentage of unique and rare silver items such as silverware, artwork, and other pieces of silver products that make it to the physical inter-entity markets. This happens because as silver increases to new personal records since the 1980s, a new group of investors and people that have held on to family heirlooms realize that this opportunity has been a decades-long battle in the making, creating a certain hysteria to sell above what they originally bought it for, not really realizing that it will eventually go much higher. So non-traditional silver forms as a percentage of the total on physical markets like eBay are now at the 7 to 10% range. The next category will mark one of the ultimate transformations in an exchange of non-traditional forms of investment silver unseen before any other awareness level, and that will be April 2011. So here we are in level 3. April 2011 marks one of the ultimate price renaissance and investor hysteria nodes possible. This, in my opinion, can either signal the beginning of the parabolic mania phase or the beginning of the correction because a storm failed to capture broader market appeal due to the underlying deteriorating macroeconomic fundamentals not keeping pace with investor hysteria, and a whole new form of criticism unseen appears as silver started to breach the nominal $50 an ounce high set back in 1980 of January, which is the test of whether silver makes it into the level 4 and subsequent ultimate and final level 5. If conditions had been what they are now, considering Europe's debt to GDP, Greece teetering on the edge of leaving the euro, and 2 major Middle East wars about to break out, an American economy turning into a greater recession, student loan delinquencies at all-time highs, state debt to GDP levels at all-time highs, and market psychosis back to 2008 Lehman-like moves, there's no doubt in my mind that silver would have quintupled in price from the level 3 levels we saw that breach intraday prices of $49 an ounce. During the month of April, silver quickly rose from $38 to $49 an ounce, as you can see, which is a 28% increase in less than 30 days. This was almost a 1% rise per day on average. And if you go back to some research on the Dow at its best moved around somewhere between 0.9 and 1.1% a month higher, and the higher estimation is pretty generous. Silver was moving 25 times faster than the Dow was in its glory days in the month of April. As a percentage of the total physical inter-entity markets, non-conventional silver forms were now around 20 to 25% of the total volume. This is double the rate I saw during level 2. And remember, level 2 only moved from 5 to approximately 7%. A large move, but nothing compared to level 3's node. The only issue was now getting by the psychological barrier of $50 an ounce. Had this happened, there was a good likelihood of moving quickly into level 4 awareness territory before a correction took place. So, in summary, as a result of this high adrenaline movement in silver over the past 2 years, we have seen investors, hoarders, and sellers come in at astounding rates. 2011 marked the first time since 1980 that silver started to mirror and outperform its older brother gold. These events have left an impact on many minds for better or worse. The main points to take away are very much related to events in nature. For example, in order for a hurricane to reach a Category 5, the elements represent the macro environment, including moisture levels, heat, water temperatures, low and high pressure systems, and humidity can all affect the price of a hurricane, also known as its fundamental strength category. And just like free markets, there are events that can distort the price of a hurricane, such as wind shear, which can throttle storm formation. In silver terms, this would be equivalent to mainstream media continually producing negative vibes as institutionals use algos HFTs, and other forms to take advantage of natural corrections and ultimately force the price much lower, preventing it from butting into level 4 and 5 awareness, just as wind shear prevents a major storm from moving into category 4 and 5. The silver market elements that produce major storms include market indicators such as debt to GDP of sovereign nations, increasing sovereign bond yields, negative real interest rate, market psychology, and most importantly, the money supply and the effects of quantitative easing programs, simultaneously produced by world central banks in a concerted effort to prop up failing banks and over-leveraged institutions that bear too much risk. Silver has indeed moved beyond its Achilles heel of only being an industrial commodity. It is now both an industrial metal and more of a precious metal. As we currently stand at a gold to silver ratio of 57.72, actually I want you to watch a short video of the history of the gold to silver ratio. This is actually pretty interesting. It's about 4 minutes long, so if you wanted to skip it, you can, but I think it's worth a look. Anytime the gold to silver ratio increases, obviously gold's moving at a faster rate than silver, vice versa. And you'll see it in this video. The coinage act is 73, 14 to 1. Remember that number, 14 to 1. So on and on. Close to the war. Continuing on, moving up to highs. You'll see the 1920s, before the Great Depression, and then going into World War II was an unprecedented gold to silver ratio. So as you can see, so far it's been pretty volatile. And going into depression area increases precipitously. Post-war. So this is when silver starts to get interesting. Going to a low of 14 to 1 during the Han brothers cornering the market. And good old Buffett purchased a boatload of silver. Maybe he bashes gold because he likes silver. And anyway, so on and on. So yeah, as you can see, from 2008, we essentially moved from 55 to 80, which was a pretty big high. That's when gold was outperforming silver quite considerably. And then, as you saw in my study earlier that I just produced, from January to April 2011, silver was increasing at a precipitous rate compared to gold. And it actually started back in late 2010. But so what I wanted to show you was that at the low down here, we're at about 32 gold to silver ratio, and we're currently at 57.72. So in my opinion, I think we have quite a ways to go to reach those 32 to 1 levels and re-enter those level 1 and 2 awareness days, and then beyond that. So as you can see, silver could honestly breach the $50 an ounce mark by fourth quarter 2012, in my opinion. And this is due to a lot of different reasons. One is, as you can see, between each QE1 and QE2, the average, this was 14 months, this was 13, between QE2 and Operation Twist. So between Operation Twist and now, it's been 9 months. And if you expect the rate to hold up 13 to 14 months, that means this October or November we could see QE3, and that'll give this, these inputs enough time to continue to fall further. And I think, in my opinion, by the end of 2012, we'll breach $50 an ounce, and then going into 2013, I think we could easily hit $200 an ounce. And that's just from my studies here on doing anecdotal evidence from eBay and just pulling different data sources together. So anyways, I hope you liked the video, and just give me a thumbs up and ask me any questions you want. Alright, thanks guys. See you around.